You know, it's easy to get lost in the day-to-day headlines about markets, but underneath all that noise, something much, much bigger is happening. We're talking about a quiet but absolutely monumental rewiring of the entire global financial system. This is a fundamental shift in how money moves, how we build trust, and frankly, what we even consider value to be.
So here's how we're going to break this down. First, we're going to look at the new financial map that's being drawn up by world powers. Then, we'll dive into this age-old battle between paper promises and physical stuff. We'll see how technology is finally making sound money digital and actually usable. And then, we'll get into the new rulebook needed to make it all trustworthy. And to wrap it all up, we'll imagine what your next big purchase might actually look like in this new tokenized world.
All right, so let's start with the really big picture. This whole shift isn't just about some cool new tech. No, it's being driven by massive geopolitical changes that are literally redrawing the world's financial map as we speak.
For as long as most of us can remember, global finance has run on a single highway. A big one for sure, powered by the US dollar and the SWIFT network. But what's happening now is that new parallel highways are being built right alongside it. Countries like the BRICS nations are creating their own financial payment rails, which are basically just alternative systems, so they can trade with each other directly, using their own digital currencies and get around their dependency on just one system.
Now, the key thing to get here is that this isn't some dramatic plan to launch a single new BRICS currency that's going to take on the dollar. It's actually way more practical than that. It's an engineering project. The goal is just to connect their existing digital currencies, like the digital rupee or the digital yuan, so they can all talk to each other seamlessly. It's all about making trade faster and cheaper.
So why are they in such a hurry to do this? Well, a massive driver is the absolutely staggering amount of global debt. We're talking about an estimated $315 trillion. And when nearly two-thirds of that is priced in US dollars, a lot of countries look at that and see a huge risk. It's kind of like the entire global economy is doing a balancing act on a single tightrope. These new systems, they're meant to be a safety net.
And you don't have to take my word for it. You can see the reaction right here in the data. For the first time in decades, the value of gold that central banks are holding is now neck and neck with their US Treasury debt. They are deliberately moving into neutral assets like gold that have zero counterparty risk, which is just a fancy way of saying its value doesn't depend on somebody else's promise to pay. It is a quiet but incredibly powerful signal.
You know, this whole move back towards gold really highlights a fundamental conflict that's been at the heart of money forever. This tension between paper promises on one side and cold, hard, physical reality on the other. And believe me, this is not a new debate. Centuries ago, thinkers like Thomas Paine absolutely nailed the core difference. Gold and silver are made by nature, they're finite. Paper money, well, that's made by us, and we can pretty much make as much of it as we want.
So just how far have we drifted away from that physical reality? Let's take a look at the silver market as a case study. For every one single ounce of actual physical silver sitting in a vault somewhere, how many paper claims, things like futures contracts, do you think exist for it?
The answer is it's truly mind-boggling. It's 356 to 1. That's right. For every single ounce of physical silver that's actually available, there are 356 paper promises floating around for it. What this does is it creates a system with enormous leverage. It's a lot like fractional reserve banking, but for commodities. The whole thing works because everyone believes their paper claim is just as good as the real thing, and it is a belief that holds up perfectly until the day it doesn't.
This brings us to a huge, historic problem with owning physical assets. They are a fantastic store of value, right? But they have zero liquidity. I like to call it the pirate treasure dilemma. Your wealth is real, it's tangible, but it's buried in a chest somewhere, and you can't use it in your daily life.
For all of history, owning gold meant your wealth was basically a dead asset. It was heavy, it was shiny, it sat in a vault, but you couldn't use it to buy a cup of coffee or pay your electric bill without going through the whole slow process of selling it for cash first.
But today, this is where things get really cool. New financial ecosystems are finally solving this problem. They let you deposit your physical gold into an insured digital vault, and then instantly link that value to a debit card so you can spend it anywhere. And get this, you can even lease your gold out to earn a yield of 2 or 3% more gold every year.
This is the real game changer. This innovation turns gold from a passive pet rock that just sits in your safe into a productive employee that's out there working for you 24/7. So now your asset is both defending your purchasing power from inflation and actively generating more of itself.
Okay, but making assets like gold productive and spendable, that opens up a whole new can of worms, doesn't it? How can you trust the vault that's holding your gold? How do you trust the debit card network? This brings us to the most fundamental issue of all, trust. We need new rules for both the old financial world and this new one that's emerging.
So in the traditional world, regulators use these frameworks like Basel III, which you can just think of as a mandatory safety kit for banks. It basically forces them to hold more of their own money to absorb any losses, to keep enough cash on hand to survive a crisis, and to limit how much they can borrow so they don't get too big to fail.
But this new digital world, it completely flips that model of trust on its head. Instead of relying on top-down rules from big institutions, it relies on mathematical proof that's enforced by computer code. In this new system, trust isn't just assumed until something goes wrong. No, it has to be proven from the ground up for every single transaction.
And the core building block for all of this is something called a tokenized trust receipt. Now, forget about money for a second. Just think of this as a digital, completely unforgeable notary stamp. It's not an asset itself. It is simply cryptographic proof that a specific action actually happened, like a package was delivered or a service was completed. It essentially tokenizes the proof that a promise was kept.
Okay, so we've talked about all these huge kind of abstract ideas. Let's bring this all down to earth. How could parallel rails, liquid physical assets, and programmable trust actually change a real-world transaction you might make, like buying a car?
All right, imagine you want to buy a car for $20,000. You could use $15,000 in cash and $5,000 worth of your tokenized physical silver. A smart contract then locks up your funds as something called purpose-bound money, which means that money can only be used for this specific car purchase and nothing else. Then, the very moment the car's title is verifiably transferred to your name, that contract automatically releases all the funds to the seller.
I mean, this new method is just a total game changer. It's super efficient. It blends different kinds of assets together seamlessly. It's incredibly secure because those funds can't be misused. And since it's all automated, it pretty much eliminates the risk that the other person won't hold up their end of the deal. You can even program in other cool stuff, like automatically activating insurance if the delivery is late.
And all of this, it brings us to one last really big question. In a future where trust itself is programmable, where physical assets can be spent in an instant, and where value is no longer tied to just one currency, what are we even going to call money? The great rewiring is happening right now, and believe me, it is changing all the rules.